Data that showed a substantial dip in vessel crossings through the Strait of Hormuz and the Suez Canal in recent days. The downturn spans multiple ship categories, including crude tankers, container ships, bulk carriers, raising fresh concerns about the mounting geopolitical risk in the Mideast. And we actually saw oil respond to this instantly. The Post notes that westbound and eastbound traffic through the Strait of Hormuz is down 10.8% and 11.4% respectively. Crude oil tanker activity has fallen 9% in both directions, suggesting weaker flows from Gulf producers to Asia, and even steeper declines were reported in chemical and LPG tankers, down 20.4 and 13.6% respectively, signaling potential demand slumps and industrial slowdown, particularly in China. Now, this is the key here, because these threats about closing the Strait of Hormuz, it's not just right on its face. China has, and I was actually watching again on CNBC here this morning, China has a very transactional relationship with Iran, and they rely on Iranian oil. I actually have some stats here. Roughly 75% of Asia's oil imports flow through the Strait of Hormuz, compared to just 10 to 15% of Western oil. China alone pulls in over 1.6 million barrels per day via this route, mostly from Gulf suppliers like Saudi Arabia and Iraq, and now more than 80% of its crude travels through the Strait of Hormuz. So if we come back to the threat here about closing that would absolutely cripple one of Iran's allies. And in fact, they were saying on CNBC this morning, China responsible for propping up the Iranian economy because they buy so much oil. So this definitely is going to have an impact on us in a regular basis. Headlines that come out about this, whether it's official, whether they're pondering, all of that stuff is going to make energy and oil volatile, and it's going to give us an opportunity to take advantage of that. Ideas for that: do we see more of a move here in crude? All of those things, really good ideas for potential trades here, and I'm open to both sides of it. I don't know what's going to happen, so I'm open to both sides of it. I don't generally have a lot of energy positions, so for me, this is going to be a wait and see and feel it out first before we end up taking that. The other thing to note here is that the price of oil is actually going to have more of a ripple effect for us here as we start focusing on the Fed and rate cuts in the later half of the year. Oil has been one of the deflationary commodities here. If that spikes, holds, and continues to move higher, that may change the calculus, and that's absolutely something that we should be prepared for. Anyway, getting back to the article here. At the same time, however, the Cape of Good Hope is absorbing portions of this traffic with a lower pace of decline, clearly hinting at a shift in trade routes as vessels steer clear of the Red Sea. I'm going to give you this article as well, because the tweet that's in here actually has a great screenshot from the Bloomberg terminal that shows these different ship crossings where you can get some of that data. So really interesting stuff. As tensions continue to flare in the region, markets are watching closely after Iran's parliament voted to authorize a potential closure of the Hormuz Strait on Sunday. And again, these are things that we're going to have to pay attention to. There's probably going to be multiple headlines about that. They're potentially going to close it. They're voting to close it. The actual final decision rests in the hands of the supreme leader. All of these things are going to be going back and forth, and they're certainly going to impact energy and oil markets. China has likewise slammed the U.S. over its strikes on Iranian nuclear facilities, saying that it, quote, exacerbated tensions in the Middle East and dealt a heavy blow to the international nuclear non-proliferation regime, end quote. Now, these comments come as no surprise to us, or at least they shouldn't, because China is such a buyer of Iranian oil, and clearly things like that are under pressure, let's say right now. The other thing here to keep in mind, and I don't necessarily know that there's an immediate trade that we can do for this, but the other thing here is that this again represents a shift. China and Russia saw what happened here, and they saw that a pack of B-2 bombers flew 36 hours from the middle of the United States undetected into the Middle East and then delivered their payload and got out without even being seen. You better think twice about some of these decisions that you're going to make, and I think China and Russia are seeing that here from this. What will that lead to? Not too sure. The other thing about Russia here is that they're obviously still involved in a conflict with Ukraine. So them coming to aid and really amplifying fighting and boots on the ground, I'm just not sure I see it yet. Again, all things that we should pay attention to. One more here before we actually move to some of the charts. Marco Rubio urges China to intervene, calls Strait of Hormuz closure, quote, economic suicide for Iran, end quote. We retain the option to deal with that. Rubio called on the Chinese government, which has close ties with Iran, to step in, quote, I encourage the Chinese government in Beijing to call them about that because they heavily depend on the Strait of Hormuz for their oil, end quote. It's economic suicide for them if they do it, and we retain options to deal with that. The important part here is that I know there's been a lot of talk back and forth about the administration. They're just firing from the hip. They don't really have a plan. That's all nonsense. Should have believed that was nonsense before. Very clear that's the case now. It certainly appears that they have a number of possible events and next steps already planned for here, and Rubio is alluding to that. Following U.S. airstrikes on 3 key nuclear sites, Iran's foreign minister warned that the Islamic Republic, quote, reserves all options to defend its sovereignty, end quote. Iran's parliament has backed the idea of closing the Strait of Hormuz, but the final decision lies with Iran's National Security Council. The Strait of Hormuz is a vital trade route with approximately 20 million barrels of crude passing through it daily, accounting for 20% of global consumption. If the strait were closed for an extended period, oil prices could soar over $100 per barrel, according to experts. Again, no guarantee that this happens, but this would certainly have an impact on a ton of stocks that we trade here. And it behooves us to stay on top of this. The recent U.S. strikes on Iran's nuclear facilities have sparked concerns about the potential repercussions of global oil prices. China, a key player in this scenario, has warned of spiraling escalation in the Middle East and demanded an immediate ceasefire at the UN. The situation has the potential to significantly impact global oil prices as market analysts and traders assess the situation. Earlier, the CEO of Shell, Wael Sawan, had expressed concern over the escalating conflict between Israel and Iran, warning of a potential, quote, huge impact on global trade, end quote. The Strait of Hormuz, a major artery for the world's oil trade, is of strategic importance, and any blockade could send shockwaves through the energy market. Meanwhile, energy analyst firm Kepler, I think that's how you pronounce it, stated oil prices may surge between 7 and 10% post airstrikes. China's response to the U.S. is to call for subsequent actions in the region and will closely be watched by the global community, especially given China's role in the global trade.